Let's bring in Alex Coffey, host of Next Gen Investing. Good morning to you, Alex, and happy Friday. Let's start with Broadcom, a big one after earnings and a big chip deal there. Tell us what you're seeing.
Yeah, good morning, Sam. Yeah, this is probably the story of the day, although obviously the story happened yesterday. But you look at the movement in Broadcom, set to open up over 10% higher. This is a big move for one of the most important companies in the marketplace. This is post-earnings, but as you mentioned, also saw a second leg higher on a Financial Times report, which we'll go through in just a second. Starting with the earnings, third quarter adjusted EPS $1.69, inches above the $1.67 expected. Adjusted net revenue just shy of $16 billion, was ahead of estimates as well. On the semiconductor solutions revenue front, which is their most important segment, of course, containing AI, that came in at $9.17 billion, ahead of estimates. Third quarter also, they broke out AI semiconductor revenue, which came in just ahead of estimates at $5.2 billion. If that was just what we saw, you probably wouldn't have seen this type of reaction. In fact, you actually saw the stock initially slightly lower on those numbers. But as the guidance figure started to hit the tape, you started to see the stock move higher on its first leg. They guided for their current quarter, their fourth quarter, AI semiconductor revenue to come in at $6.2 billion. This was quite a bit ahead of the $5.82 billion that was expected by the street. They also provided revenue for about $17.4 billion, ahead of the about $17 billion that was expected for that fourth quarter. But as you mentioned, they also saw a second leg higher on this Financial Times report that AI, or OpenAI rather, is set to start a mass production of its own AI chip that is co-designed with Broadcom. This is seen as a way of kind of weaning off of Nvidia. So you see that reaction function that you're talking about, Broadcom continuing to move higher, and you actually see Nvidia a little bit lower. So we're starting to see the situation where this space is starting to cannibalize itself a little bit. What is good for one may no longer be good for the other. And it kind of goes to show that we're watching the maturing of this AI chip build out.
Yeah, it's a shifting paradigm, isn't it? And, you know, a lot of the analysts have sort of been saying that Broadcom has really been seen as Nvidia's number two. But I was speaking to one analyst yesterday who suggested that these are the two names that you must own. I'm just doing a control F on the street recommendations for this stock, and it has earned itself a long list of price target boosts. I'm just wondering what you're seeing as far as the analyst calls on this one, what the consensus is here about that.
Yeah, well, consensus is about the same as it was before. It did get a couple upgrades, but for the most part, over 90% of analysts were already in the buy equivalent camp. But a couple notable ones: Morgan Stanley raising their price target to 382 from 357. They say, though the July quarter was basically in line on all metrics, the October revenues were guided 2 to 3% ahead of consensus. And more importantly, the company is putting forth AI customer into a fourth AI customer into backlog, with a surprising forecast of $10 billion of incremental second half revenue. Also, Evercore ISI, similar, adjusting to 370 from 342, and they say that they delivered a stellar quarter. And they also talked again about that $10 billion in custom AI XPU orders from a new customer. So reportedly, of course, that is OpenAI based off the Financial Times reporting. But really, really nice trajectory, obviously, in that stock. But it's only picked up momentum as we got through the jobs data, and that didn't derail the rally.
Okay, another stock sitting up pre-market is Tesla, off the back of this new proposed pay packet. Diane and I were laughing about this, or having a joke about this morning. We're putting the tin cup out. We'll take just a fraction of that. I mean, they're talking about $1 trillion, but he's got to earn it. He's got to work for it. Talk us through this story, Alex.
Yeah, not all that different than the previous packages for Elon Musk. A lot of incentive goals, and if you reach those, pretty extraordinary payouts, but in the grand scheme of things, relatively, small in terms of the value that would be created. it's basically saying, Tesla would be extremely valuable, and it has a chance to, pay out in max up over $1 trillion. But it's tied to market cap. It's tied to number of cars and robo-taxis and robotics sold. The idea being to tie Elon to the company and focus him with his visionary leadership on Tesla. And also, they did seek assurances to kind of, reel in some of those political aspirations. So, look, this is a headline grabber, but in reality, not all that different than some of the other pay package we've seen Tesla give Elon, and really not all that different than other companies give their leadership. It's just Tesla a little bit more volatile stock, a little bit more of a bigger outsized share ownership by the company CEO still. So the numbers get really big really quickly. But again, as you said, he's got to earn it, and Tesla's got to perform for that earned situation to happen.
Yeah, and as you say, it's really to keep him motivated and focused, as certainly the company has been saying. And I think that's what the music to investors' ears is all about, particularly given some of the concerns around the distractions or so-called side hustles. So, really, really good to put it in context and perspective there, Alex. So really appreciate your time.